Hello, everybody. Thank you for joining us today. My name is Mike Griffin. I'm one of the facilitators for today's webinar, and I'm very glad to introduce you to David Cicchini. He's one of our sales directors here at Inventory Planner. He's going to make a wonderful presentation for you guys today. And what I would like to do is invite you to submit your questions, whether you submit them within the questions module or the chat module. Then I'll be monitoring those questions while David's doing his presentation. So without further ado, David, over to you.
Yeah, thank you very much, Mike. And welcome everyone. I really appreciate everyone joining today. We know that it's the holiday season. I'm sure everyone's extremely busy. So again, very much appreciate you taking time out of your busy day to join us and really talk about forecasting for customer demand, which ultimately should result in better cash flows. And of course, we're going to take a deep dive into that topic, address it in quite a bit of detail, and show you how we can really solve some challenges as far as cash flow goes for retail. Now, Mike, before I carry on, I want to confirm, can you see my screen?
Yes, I can.
Okay, good start. Good start. All right, so today's agenda, there's really three key items. I first want to address the current state of retail. So we're going to talk about actually where retail's been, where it is today, and potentially where it's going. We're going to take a deep dive into the challenges that retailers are facing, mostly around cash flow and getting their inventory right. And what I mean by that is getting the right amount of inventory at the right place at the right time so they get the most out of their inventory purchases. And retailers don't get in a situation where they overstock, so they have inventory sitting around that they can't move, or the opposite of that, they understock, where customers are visiting their website or the store or calling in an order, and the merchant has to tell them, unfortunately, we don't have that inventory. So in other words, you're turning away revenue or turning away sales. So that's going to be the first topic, the current state of retail and the related challenges. Then we're going to move into how Inventory Planner by Sage solves those challenges. We'll first talk about the data. So how you can use the data that you already have available alongside Inventory Planner by Sage and get the absolute most out of that data and begin to get the right amount of inventory at the right time in the right place. And then we'll take a deep dive into how Inventory Planner by Sage works. So again, our agenda items will first address the current state of retail, talk about the related challenges. We'll talk about the data challenges. So you might have the appropriate data today, but that doesn't necessarily mean that it's easy to develop reports that can help guide you to make the right purchasing decisions. So we're going to show you what that looks like, and then we'll take a deeper dive into really how Inventory Planner by Sage works. Okay, but moving on to the current state of retail. I like to start with a quick timeline over the past 5 years, because retail has really been a tale of two seasons, if you will, a really volatile industry over the past 5 years. And you might be able to say this about any industry, but I think if anything, it's been magnified in the retail space, in the retail and wholesale space. So if we go back to, let's call it 2018, 2019, or pre-pandemic, the retail industry was certainly growing. And I think that was due to a number of factors, but just to mention a couple, there was lower barriers to entry, right? A lot of great technology coming out, a lot of great website platforms like a Shopify or a BigCommerce or a WooCommerce, making it easy to spin up a very professional website. A lot of point of sale applications coming out that are offering great functionality at a reasonable price. So these new technologies certainly help lower the barrier to entry. Therefore, we saw the total addressable market, or the total number of retailers here in the US and in Canada, grow substantially. Not to mention at that time, interest rates were fairly low, so there's a lot of available funding. If you had to go to the bank and say, hey, we need a loan, we're going to spin up a warehouse, or we need an additional store. At that point in time, that was something that the bank was willing to hear you out on and potentially give you that loan. And then we saw a major spike in e-commerce, right? E-commerce begins to take on brick and mortar. So these were the pre-pandemic days. It was nice, steady growth up and to the right, if you will. And then, of course, at the end of 2019, beginning of 2020, the pandemic begins. And retailers, just like probably every other industry, we're in a bit of shock. We're questioning what's the future hold. Are they even going to be a going concern? In other words, are they going to be able to continue on as a business? And the good news is, as the dust kind of settled, the pandemic for a lot of retailers was a great thing. Reason being, there was actually even more available funding. So the federal government steps in, they run some stimulus packages, they lower the interest rates even further. So a lot of available cash out there, not only for businesses, but also for the consumer as well to actually spend on goods. E-commerce explodes even further. The e-commerce trajectory, if you will, is probably expedited by 5 to 10 years during the pandemic. Everyone's stuck at home. They can't go into the store. They have to visit websites, make purchases from there. So e-commerce takes off. And this was a time that was primarily pretty good for retail, in the sense that there was a lot of sales coming in. And most of the challenges were in the back office. And what I mean by the back office is everything that happens after the buy button. Okay, how do we receive these orders? How do we take payment? How do we route them to the correct fulfillment location? How do we make sure that we're keeping the customer updated as their orders going through the pick, pack, and ship process? How do we easily deal with returns? How do we account for all this? That's what I mean by back office tech. The way that I like to put this is back office tech really, for retail specifically, is all about doing more with less. And that's what retail was really focused on during this time. A lot of orders, a lot of demand coming in. They're just trying to keep up. So again, the pandemic, fairly good for retail. And then 2022 hits, specifically March 2022. This is when the Fed goes off on their first rate hike, right? So they begin to increase the interest rates. So this sets off an aggressive campaign to cool off the economy and ultimately combat inflation. So when you begin to combat inflation by raising interest rates, individuals, businesses' disposable income goes down. Retail is kind of the first industry that takes that hit. So unless you're selling, very much necessary goods, in other words, non-discretionary items, you're going to take a hit because people are going to be a little tighter on their wallet. So we saw that. So that's what I mean by it's a tale of really two seasons, if you will. Pandemic, huge spike. It looked like the gravy train was going to keep rolling forever. Fed steps in, they have to cool off the economy. They raise those interest rates to combat inflation. That does indeed cool off the economy. Retail indirectly begins to cool off. Now we're dealing with the current state, what I call the new norm. What I find when speaking to retailers, and we're going to get into some surveys that we've conducted over here at Inventory Planner by Sage, but when I speak to retailers, their main focus is cash flow today. They have to be much more focused and disciplined around their cash flow. And what I mean by that is if they go to spend money on inventory or they go to spend money on marketing, they need to make sure that they're going to get a return on that spend. So another way to put that is the days of cheap money resulting in what I call the spraying and praying method are over. And what I mean by spraying and pray, when times are good, you can kind of buy whatever inventory, throw it on the website, market wherever you need to, and you know that the demand is just going to keep rolling in and you're going to get that return. So it's been a lot different over the last few months. We totally recognize that, and it's all about being more disciplined with cash flow. And that's really what we're going to touch on today. Now, what I'd like to do is double click on the current state. So really, it's been a situation where we've had a lot of rising costs in excess inventory within the retail industry. And this has really led to a lot of pressures on cash flow. More specifically, we've seen about a 400% increase in freight. So what I'm talking about is getting products from China or overseas here to the US has gone up significantly. Now, last time I checked, I do have actually some new numbers, and I probably should have updated this before the presentation. This has gone down quite a bit. So it really hit its peak a few months ago. We are seeing the freight costs starting to stabilize in the industry. Of course, the price of fuel has gone up. So these things also contribute to rising costs overall. Individual wages have had to go up in multiple cases. Individuals are, because the cost of living has gone up, are demanding more money. In order to keep employees around, we have to abide by that. And then, of course, the marketing has increased substantially. And what I mean by marketing is even when you market on Google Ads or Facebook or Instagram, that's gone up about 222%. So all of this has resulted in, when we run the numbers, an average retailer having about 19 days of cash on hand before they go bust. So we're at a point in time where it's more important than ever to get the cash inflows and outflows right. And the primary way in which you do that is through inventory. Because if you think about it, for a retailer, their primary inflow and their primary outflow is indeed inventory. By purchasing inventory, you got to spend money. That's your outflow. By selling that inventory, you obtain revenue. That's your inflow. So you got to get that balance as accurate as possible. And you can't afford, more so than ever before, the last 5 years, let's call it, a situation where you purchase the wrong items and then you can't move those items. So now you've got obsolete inventory that potentially you need to write off. Or the other side of the scenario where you don't purchase enough inventory. You spend money on marketing, customer visits the website or comes into the store only to hear that the product that they're looking for isn't available. So now you've wasted the money on marketing, but not gotten any of that revenue out of that marketing input. So that's what I mean by using inventory and getting the right amount of inventory at the right time in the right place to ultimately help your cash flow. And a little bit more on that. So back to my earlier point, inventory really is the largest expense in revenue, or the largest outflow and inflow for a given retailer. And what we find when we run the numbers is 70% or more of cash is tied up in inventory for your average retailer. So it kind of just doubles down on my point that it's all about inventory if you want to get your cash flow correct. And cash flow ultimately is the lifeline of the business. Another stat that's worth noting is 80% of inventory only produces 20% of sales. Another way to think about that, and again, these are your averages, if you will. And we've surveyed about 500 plus retailers in order to come up with these numbers, but we'll get into more of that later on. But let me repeat that. So 80% of inventory only produces 20% of sales. Another way to think about that is 20% of inventory produces 80% of sales. So it's all about getting the right amount of inventory at the right place in the right time. Again, you can't get yourself in a situation where you send out bad POs. And what's a bad PO? Purchasing too much of one item that you can't move and not enough of another item. Let's talk a little bit more about that survey that I mentioned. So over here at Inventory Planner by Sage, we talk to customers, retailers, day in and day out, but we want to make sure that we're not making assumptions. So for that reason, we do routinely run surveys. So our last survey was run about a month and a half ago, and we surveyed 500 plus retailers. And I just want to go over a few key results here to kind of further get the point across. So one thing that we noticed was that, and one thing that we asked these retailers during the survey is the downturn in consumer demand over the last 6 months, has it left you with excess stock? And nearly 60% of the retailers that we surveyed say yes, they do have excess stock. So then we took it a step further and said, is the problem with excess stock a major concern for your business or not? Like, do you feel like you're going to be able to burn through that excess stock, or are you starting to panic where what are we going to do with this? We already made these purchases. We don't want to write it off. How can we get this out the door? And about 50% or 50% of those 500 plus retailers did agree that this is a major concern of theirs. And not to beat a dead horse here, but we took it a step further and asked the retailers in which we surveyed, have you written off any excess stock as a loss during the past 12 months? And nearly 50% said yes. So here's a situation where customers of ours and retailers that we surveyed did cut bad POs. Right? What I mean by that is they thought the good times through the pandemic were going to continue forever. They didn't foresee the economy cooling off. They purchased too much inventory. They probably marketed that inventory. So they're both outflows and they've got nothing to show for. Now, it's not all bad news, right? That's why we're here, Inventory Planner by Sage. So we're going to get into the solution here in a minute. But the idea is there's a lot of challenges in the retail space, mostly around inventory, which directly can relate to cash flow issues, and that's ultimately what we're here to solve. Now, there is the other side of the coin, right? So it hasn't entirely been, not for each and every retailer is it always an excess stock or an overstock situation. We do have customers that they were able to get through their excess stock. We've spoken to retailers that were able to get through their excess stock, but now they're in a situation where they're a bit panicked or a bit paranoid. So now they're cutting POs that are understocking. In other words, they're not bringing in enough inventory to meet demand. This is also an issue. So now you have a situation where you're running through that inventory too quickly. You did the marketing, so that's an outflow. You had to spend money on marketing. Customers are coming to the website only to see that the product's out of stock, or they're swinging by the store only to be told the product's out of stock. And now you've just wasted that marketing dollar and you've left revenue on the table, left money on the table. So that's the idea here is we're trying to get through Inventory Planner by Sage, we're trying to get the retailers that use our application in what I call the Goldilocks zone. What I mean by that is the right amount of inventory at the right time in the right place. That's how you get the cash flow machine working. You send out good POs with just the amount of inventory you need. You sell through that, you make a margin on it, you reinvest in the business, you get the cash flow flywheel, as I like to refer to it, moving in the right direction. Now here's just two casualties, if you will, that didn't make it through the excess inventory and cash flow issues that relate to that excess inventory. So we have Carvana, obviously a huge retailer here in the US. Again, they thought the glory days of the pandemic, when everyone was stuck at home with excess cash, disposable income, using that to purchase goods, was going to last forever. They ended up stocking too much inventory. The sales didn't come in. They got themselves in a cash flow situation, ultimately resulted in them going bust. Same thing with Made. Now, this is a retailer over in the UK, I believe. They sell furniture, a lot of outdoor furniture. You know, again, people were stuck at home. They wanted to upgrade their couch. They wanted to upgrade their outdoor furniture. They thought the glory days were going to last forever as well. Doubled down on inventory, overstocked, got themselves in a cash flow, a poor cash flow situation, I should say, ultimately resulted in them going bust. So let's talk a little bit more about the solution. Now, before we do so, I'd like to point out that everyone on the phone today, so all the retailers that we speak to, just about all the retailers that we speak to, already have the data they need in order to make informed decisions and get in that Goldilocks zone. Again, purchasing the right amount of inventory, the right time, in the right place. But there's a few challenges. It's not as easy as just having the data. And what I mean by that is a lot of times this data is siloed in different applications. So you got to go into these applications, you got to pull it, you got to consolidate it into a single source, usually an Excel spreadsheet. This takes a lot of time. This takes a lot of manual effort. And with manual processes, we know come errors. And that's the idea here, that we also, beyond just giving you really good information on what to purchase and when, we want to make sure that we're saving you time and reducing errors. Now, to that point, going back to our survey, when we ask customers, is this really a problem, or do we just think it is in our head, they agree. So 60% of the finance professionals that we have spoken to say that they spend way too much time consolidating data, cleaning it up, only to really question its accuracy, right? Because once you go into all these different applications and you gather the data and you get it into a single Excel spreadsheet and you fiddle around with the data and maybe run it through some equations, days have gone by, sometimes weeks have gone by. Now you're questioning, is it even still accurate? Did I pull it all correctly? So it's all about time, saving time through Inventory Planner by Sage and reducing those errors. And what we find is when you look at these spreadsheets, so when customers are trying to report and forecast on spreadsheets, if you take a deep dive into these spreadsheets, 88% of them contain at least one significant error. Which, if you take a step back and think about it, I mean, it kind of makes sense, right? I mean, we're all human. When you're diving into 3 or 4 different applications, you're running reports, maybe on different days, you're consolidating it into an Excel spreadsheet, then you have to run it through an equation or an algorithm. I mean, again, we're all human. We're going to make some errors. But again, when we take a deep dive into these spreadsheets, we find that 88% of them include one significant error. Now, that's a big deal, because now if you take that information and you make a business decision, you could potentially accidentally be making a poor business decision only because you have inaccurate, untimely data. So that's another thing that we're trying to solve through Inventory Planner. We can consolidate the data from multiple sources in real time and present it in a really meaningful way. And here's a customer that we did just that for. So here's a customer out of the San Francisco Bay Area. They're an apparel company named Calk, as you can see here. And that's just what they're saying. is that before they had inventory planner, it was a mess. It was taking them days to aggregate all this data from these different data sources, only to question the validity of the reports that they were using to make business decisions off of. Fast forward to them on inventory planner. Now they can dive in at any point during the day. They can be certain that the data is timely, accurate, complete. And when they go to make those key business decisions, they just have a lot more faith. Let's talk about what demand planning is, because that's really what inventory planner by Sage is at its core. So really it's using past sales behavior and future assumptions to predict future sales patterns and trends. It's as simple as that. Taking all your historical data, which I'm sure you have today, what sold, when it sold, who'd you sell it to, where did it sell out of? Maybe you make a few future assumptions and you use that information to predict future sales patterns and trends. That's the idea of demand planning. And the idea is that you want to have products to your customers when they want it, right? So the right products at the right time, at the right place. Get the most out of your inventory, get that cash flow flywheel moving in the right direction. And then you want to take the guesswork out of a forecast, right? There's nothing worse than cutting a big PO that you know is a costly PO. In other words, it's high in value, and you're kind of questioning, am I purchasing enough of this item? Am I purchasing way too much of that item? We're trying to take the guesswork out of that. So when you do cut a PO, you're confident that this is going to meet demand, but it's not going to get me in an excess stock situation. And then what makes good forecasting? So again, these are probably some other items that you have at your fingertips, but we're pulling this all together into a single application and kind of spoon feeding you the results to help save you a lot of time, reduce those manual errors, and ultimately get in that Goldilocks zone. But it's all about sales velocity, right? So you have to understand how fast each and every item is selling. So when you do have it in stock, how fast are you selling through that? The forecast method, this is also key. You can't treat every product the same. Well, maybe you can if depending on your product catalog, but for most of our retailers that we speak to and retailers that are customers of ours, their catalog's diverse. They need different forecasting methods per item. So you might have some items that are what I call evergreen. They sell pretty routinely throughout the year. So maybe you're okay with just taking a weighted average, but maybe you want to identify trends. Is this item starting to sell more or less? And if so, do I want to factor that in the forecast? Maybe you have seasonal items that spike during certain times of the year. Well, you're going to want a seasonal forecasting method associated with these items. So in other words, you want to be able to tell a system, hey, don't be too concerned about how this item performed or sold last week or last month or last quarter. Be much more concerned about how it performed this time last year, because it's a seasonal item. And then last but certainly not least would be lead time, right? You have to understand how long it takes from when you send a PO to a vendor, they get you those actual items. Because if you don't understand that, you could say, okay, I need 10 more in order to meet demand, or I need 5,000 more in order to meet demand. But if you don't understand the lead time with your vendors, you could request that 5,000 way too late or way too early, right? So it's all about establishing good lead times with your vendors and holding them to those lead times, something else Inventory Planner by Sage can help out with. Okay, but moving on, we want to talk about a little bit more about how Inventory Planner by Sage actually works. So the first thing I'd like to pull up is a slide here that just shows the data that Inventory Planner by Sage needs in order to do its job. Now, before I get ahead of myself, I should mention, it doesn't really matter where we get this data. We just need this data in order to do our job, in order for the application, I should say, to do its job. So some of our customers, they come with an ERP. Some have an accounting solution like a Sage 50 or a Sage 100 or a Sage 300. Others say, nope, I want to grab this data from the sales channel, which might be their website, like a Shopify or a BigCommerce website. Again, it doesn't matter where we get this data, but here's the data that we need, or Inventory Planner needs, in order to perform its responsibilities. So we need the product catalog, we need the vendor catalog in the related attributes, lead times, quantities you need to purchase in, price breaks, so on and so forth. We need the sales history, of course, because we have to identify how these products are performed in the past. We'll also bring in inventory levels, so we have to fully understand what's already in stock, what's out on PO. in order to make accurate forecasting decisions. And then we can push and pull POs and transfers. So what I mean by that is once we have this data, a lot of our customers initiate POs out of Inventory Planner. And that could just be they want to create the draft PO and then sync it over to a Sage 50 or a Sage 100 or a Sage 300. Others actually send the PO out of Inventory Planner, but that's totally up to you. Same thing from the transfers piece, because we understand if you do have multiple locations, hey, this location's understocked, this location's overstocked. Why don't you grab some inventory from the overstock location and get it to the understock location? We can certainly help out with transfers. That doesn't mean that we take over the transfer process, but we can help initiate the transfer, send that to the appropriate system, whether that be Sage 50, 100, 300, where then you can actually execute the workflow regarding the transfers. So again, this is the data Inventory Planner needs in order to do its job. Now, once it has this data, then it can get to work, and there's really four, there's not actually a lot more than this, but these would be the four primary outputs, key outputs that Inventory Planner delivers. So number one, we're gonna take all that data, we're gonna run it through our algorithms, we're gonna look at your historical data, what's already in stock, your lead times with your vendors, what's already out on PO, plus a whole lot of more information, and we're gonna automate a forecast behind the scenes. So once we have that automated forecast, we're gonna be able to deliver what we call a replenishment report. That's gonna spoon feed you or really help you decide what you need to replenish in order to meet future demand. That's the report that helps you get in that Goldilocks zone, right? Purchasing the right amount of inventory at the right time, the right place. That's the report that avoids bad POs that can become a cash flow disaster. And again, what do I mean by a bad PO? One line item contains way too many items. Now you got an overstock situation. The next item that you're purchasing, you didn't purchase enough. You're turning revenue, you're turning sales, therefore cash away. That's a bad PO. We're trying to get you in that Goldilocks zone. That's what we do through the automated forecast and then ultimately the replenishment report. Now we take it a step further. We have a lot of great KPIs and reports within Inventory Planner as well. This is to help you understand business trends. So in other words, what categories, brands of product, individual products are working for you in the business, which ones have the highest margin, which ones are selling the fastest, which ones are spiking in sales, which ones are decreasing in sales. These ton of great reports, like 200 plus KPIs that you can bring into these reports, rearrange the columns. But the idea is that we want to help you make better informed, I should say, business decisions using real-time data that you can be confident is accurate and complete. And then as I mentioned earlier, because we have all that great data, a lot of our customers at least initiate the draft PO with an Inventory Planner. We can always hand that over to like a Sage 50 or a Sage 100 or 300 or so on and so forth, where the customer can ultimately send out the PO to the vendor, receive the items in. Some customers do prefer to actually send the PO out of Inventory Planner, so that is an option. And Mike, maybe I'll call on you. How are we doing, number one, on time? And are there any questions that came in over the chat?
Sure. No questions yet, but we have approximately, I don't know, 20, 25 minutes left. So
okay.
Yeah, we're going well.
I'm thinking then, with the time that we have left, I'll actually jump into Inventory Planner and give the attendees here on the call just a taste of the user interface, and maybe I'll discuss some quick forecasting as well, so you can get an idea of what that replenishment report looks like. So that replenishment report that again gets you in the Goldilocks zone as far as purchasing the right amount of inventory at the right time, the right place. So let's do that. And Mike, before I carry on, I want to confirm again. Can you see my screen? It should be the Inventory Planner user interface.
Yes. Yes.
Okay. All right, so a couple of things before I get ahead of myself. One, you can see I'm in a web browser here. So I do want to call out that Inventory Planner by Sage is a cloud application. So in other words, as long as you have an internet browser and an internet connection, you will be able to access it from anywhere. Now again, Inventory Planner by Sage is not an inventory management system in itself. Remember what I said, we have to plug into another solution, another data source to pull the product information, the sales information, vendor information, inventory levels, so on and so forth. What that data source is, we don't care. We have a ton of pre-built integrations. We have a development team over here that can integrate to anything that you throw at us. So the idea is that we'll sync over all that data and then we'll get to work. Now, just because we only have 20 minutes, I'm going to go right to the replenishment report. Again, this is the report that helps our customers identify what they need to replenish in order to meet future demand. In other words, get them in the Goldilocks zone. So let me break down this report real quickly. I realize this could be a lot coming at you the first time seeing it. So I have it displayed at the individual item level. So I'm showing at the individual item level how much I need to replenish in order to meet future demand. Now, if you have multiple locations, I can look at this on a per location basis. I could sum up regions, or I could look at the demand across the entire business. So if I want to hone in on just a specific warehouse or just a specific store, if I want to, maybe I have a group of stores in the Southwest that I want to group together and see the demand of all 3 stores in the Southwest, you have that ability. And then you can look at demand across the entire business, which I'm actually doing with Combined All. And then again, I'm looking at it down all the way to the product level, so the variant level. Some customers like to take this up a notch. Maybe they want to identify the categories that they need to replenish, or the brands of products they need to replenish, or the vendors in which they need to replenish from. But for demonstration purposes, we'll leave it at the variant level. Next up, we have this replenishment suggestion. And that's really what it is, a suggestion. Now, we do feel that it is a very good suggestion, and most of our customers heavily rely on it, at least as a starting point, if nothing else. So in other words, you can always override it with your management judgment, because there might be things that you know that the system couldn't possibly know about, so you want to do those manual overrides. You'd always have the ability to do that. But our customers do heavily rely on it, number one. And number two is, if nothing else, it's a great starting point. So let's talk about how we come up with this replenishment suggestion. So the first thing that we're going to help out with, this is done during the implementation process, is we'll sit down with you, we'll review your product catalog, and we're going to make sure the appropriate forecasting method is set for each and every item. Okay, so that's the first step. Assign the appropriate forecasting method to each and every item. Then once the appropriate forecasting method is pinned against the appropriate item, we run a number of data inputs through that forecasting method to ultimately give you this suggestion and put you in the Goldilocks zone. So let's talk about that in a bit more detail. And I'm just going to pick on this top item here, and we're going to first dive into those forecasting methods. So there's 3 to select from. Remember what I was mentioning back in the PowerPoint. Having the ability to have different forecasting methods based on how the SKU reacts is super important. So we do deliver that. First up, we have recent sales and trends. This is a situation where if a product's evergreen, so it sells pretty routinely throughout the year, this is definitely a forecasting method you'd want to consider. Because what I'm telling the system to do is to take a weighted average for a period of time. Now I'm going back a year in my demo account for this item. So this November all the way back to last November. I could go back further, I could go back shorter. So that's completely configurable. But I'm taking a weighted average for that period of time, a year. Now, as far as the trends piece goes, I'm also telling the system to hone in on the past 2 consecutive months. And if this product is trending upward in sales or downward in sales, have that factored into the forecast as well. So that's recent sales and trends. Again, works really well for our customers that have evergreen products, so products that sell pretty routinely throughout the year. Next up, we have last sales. This is a bit more simplistic, but can really work well for customers that turn through their product catalog pretty quickly. You know, fast fashion is an example that comes to mind. And what it really is just a weighted average for a designated amount of days. So my demo account here, it's 14 days, but of course that can be adjusted. And the reason I say fast fashion, maybe this works for other industries as well. In fast fashion, they just want to look at the last 2 weeks and identify what products are hot and which products are cold. They want to replenish the ones that are hot. They want to get rid of the ones that are cold. So they'll use recent sales and trends. And then last but certainly not least, we have seasonal. So the seasonal forecasting method. This is what I was explaining back in the PowerPoint. So here's a situation where the item actually is seasonal. It spikes or pops in sales during certain times of the year. And if that's the case, you would want to set that SKU or that product to seasonal. And what I'm telling the system to do is don't be too concerned about how sales performed last week or last month or even last quarter. Be much more concerned about how sales performed this time last year, so during the same season last year, and use that as a number to forecast off of. Also, if the business or this item or this category is growing or declining year over year, that will be factored into the seasonal forecasting method, but you could always limit that growth. This was really important, and we work with our customers towards the end of the pandemic and when things were settling down, right? Remember that casualty that I brought back up in the PowerPoint, that made furniture company, right? They thought the good times were going to continue forever. They were seeing like 500% year-on-year growth. They purchased for 500% year-on-year growth. Then they only saw 30% year-on-year growth. Ended up with a bunch of excess inventory, ran into cash flow issues, ultimately went bust. That's what we want to avoid. That's what limiting the growth ultimately allows you to do here. So we work with our customers to say, hey, things are cooling off in the economy. Don't anticipate the 100% or the 200% year-on-year growth that you saw in years prior. Okay, so those are the three forecasting methods. So to recap, each and every item gets pinned to its appropriate forecasting method, and then we run a number of data inputs through that method to ultimately calculate this number. So we're going to look at, of course, what's already in stock at this location or all locations. So what's already in inventory. We're going to look at how fast the item's selling, so sales velocity. So is this item, are we selling more of this item on a day-to-day basis, or is it starting to decline? We're going to look at what's already out on purchase order. So if any of these items are out on purchase order, we're going to factor that in, as well as when we're going to receive those items that are out on PO. If you have multiple locations and commonly transfer items out of one location to another location, that's going to be factored in. If you're forecasting at the location level, it's going to let you know, well, you're planning to send X amount out of this location. That needs to be factored in when we're forecasting future demand. And then, of course, we're going to look at lead time, as I mentioned back in the PowerPoint. In an inventory planner's terms, this is the amount of time in days from when you send the PO to the vendor to when you actually receive the items at your warehouse or your 3PL or your store or whatever physical location you receive those items at. Really important metric to get correct, and we'll work with you during the implementation process to get that as accurate as possible. Now, the good news is we track that behind the scenes as well going forward. So if you say, yep, per my vendor agreement, I've got a lead time of 14 days, then you send out 3 POs, well, the system will tell you, well, actually your lead time is 17 days or 21 days. I know your vendor agreement says 14 days, but that doesn't match reality. So that's an important metric to correct because it influences the replenishment suggestion. And then last but certainly not least, we have the days of stock. This is how long you want to hold a product for before it sells out. Now, why this is important is you might have some vendors that say, yeah, anytime you need inventory, just send us a PO, we'll do our best to fulfill it right away. Well, if that's the case, you might want to keep the days of stock fairly low. No reason to hold a bunch of inventory unless you absolutely have to. You might have other vendors, maybe big vendors like like Nike or Adidas, those are just two that came to mind. They might say, no, you get 1 PO per quarter or 1 PO per season. You just can't send us a bunch of one-off POs. Well, if that's the case, when you send that PO out, it's got to last a while. So that days of stock is going to have to be 30, 60, or even 90 days. Because again, once you send that out, you can't just follow up with another one. Whatever you send out that time, it's got to last you, 30, 60, 90 days, whatever it may be. Now, there's a lot more that goes into it. You can always edit the forecast. I've only really scratched the surface, but that's the idea at a high level. You have the 3 forecasting methods. Each SKU gets assigned the appropriate forecasting method based on its nature. And then we run a number of data inputs through that forecasting method to ultimately calculate this replenishment suggestion. Now, what I meant by a lot of customers initiate the PO with an inventory planner, because we have this great information, what they might do is just grab all these items and throw them onto a PO. I'm going to grab just these top 3 for demonstration purposes. In the click of a button, I can create a PO. It's going to default to the appropriate supplier. It's going to default to the appropriate warehouse. These can always be switched. And the expected date is going to be my lead time on file with this vendor. Of course, we have the 3 items and we have the replenishment suggestion. These can always be edited. Also, if you have at the vendor record level, minimum order quantities you need to meet, or units of measure, or a budget at the PO level, or total quantity at the PO level, or you have to get to a certain weight or a full or half truckload. These are all things that we can establish at the vendor level, and they pull through to the PO, and we'll call out, hey, you should probably purchase more, you should purchase less, to be in compliance with these vendor agreements. So the idea is you don't have to do that swivel chair approach and say, okay, here's what I need in order to meet demand, but now let me go pull up my vendor agreement and see what I need to adjust. All of that can be automatically adjusted for you if we have that rich vendor data on file with an inventory planner. Now you can either pull that over from your data source, whether that be Sage 50, 100, 300, so on and so forth, or you can enhance the data, like enhance the vendor record directly with an inventory planner here. So once this looks good, you can go ahead and hit create. That could either then initiate the draft PO over in Sage 50, 100, 300, and then from there you can send it out to the appropriate vendor and manage that PO until completion. Or for some of our smaller customers, they say, you know what, no, I actually just want to send the PO directly out of inventory planner here, which you can do. If I take a look here, we can send this out in PDF format. We can send it out in Excel format. It's just a template, so we can have the information that you need on this PO. We can have your logo, so on and so forth, if that's an option for those listening in, that you do want to send the PO out from the inventory planner. Now, as I mentioned, there's some other great reports in here. So let me go ahead and cancel this. And I just want to pull up one, which is the inventory KPI report. Now, remember back in the PowerPoint, when I described one of the key outputs of inventory planner is the reporting. And we have the 200 plus KPIs that you can build these reports with. It can help you identify trends. So let me just give you a quick example here. Maybe, for example, we just ran a promotion on ladies' dresses, which I can say there's 45 items that fall under ladies' dresses. And I want to identify how that promotion performed. I could come to this KPI report. I could click on dresses, so I can see the 45 items that roll up into dresses. I can see the sales over this given period of time. I can see what's left in stock, so on and so forth. But then I can begin to compare this out. So where I'm going with this, now I can see what did sales look like 2 weeks ago, a week ago when we didn't run the sale? What did they look like the week that we did run the sale? Did we see the uptick in sales volume in which we would have anticipated with this campaign that we ran? But this is just scratching the surface, right? To my earlier point, there's 200 plus KPIs that you can bring into these reports. So just to give you a little bit more detail here, everything in my report is grayed out here. So I'm showing the name of the item, the details of the item, the stock costs, the page views, what's out on order, what's being transferred in and out. Anything in black here is another metric that I can make available in these reports. So I have a ton of inventory metrics I can pull into these reports, on order metrics, past sales history metrics, replenishment or forecasting metrics, and then I can always rearrange the column. And I can have as many of these KPI reports as I could dream up, and I can also schedule these out in a set it and forget it mentality, right? Maybe the marketing team wants a report every Monday morning after a sale that shows the products that they put the products that they were running the sale against, and they want to see how sales performed the week before and the week during the sale, just to see if they were successful or not. I mean, maybe that's a bad example, but you get the idea that you can configure these reports in a ton of different ways, and then you can schedule these to hit the appropriate individual's inbox in a total set it and forget it mentality. You don't have to come in here and export it out, attach it to an email, and send it off. You can just come in here, schedule these out, knowing, be reassured that it's going to hit that appropriate individual's inbox at the time in which you scheduled it. So keep in mind, we only scratch the surface of what really Inventory Planner has to offer, but it's all about that automated forecast behind the scenes that ultimately results in this replenishment report that's going to help you get in that Goldilocks zone, start cutting better POs, get the cash flow flywheel moving faster in the right direction. We can certainly help get rid of excess stock or identify what inventory is going to become excess or overstocked before you get there. And then we have a ton of great reporting, and we can certainly help out with the PO initiation process, if not the process in its entirety. But I'm going to go ahead and pause there. I'm sure we want to save some time for questions at the end. So I'll do just that. Let me go ahead back to the PowerPoint. Share this slide with my contact information in case anyone's interested for more. And Mike, I'll lean on you. Any questions coming in via chat?
No, I don't have any questions at this point. So that means you're doing a fantastic job, I think. So answering all their questions in advance. But yes, I would highly encourage you guys take down David's email address and contact information. I've been a consultant and a trainer here at Inventory Planner for a couple of years now, and seen so many positive effects with people coming in and realizing what benefits Inventory Planner brings to the table. So yeah, countless success messages. So I second everything that David has shared with you today. So yeah, if you got a question, go ahead and send it through. We'd be glad to take it. I know we have like only like 7 or 8 minutes left, David, anyway, so we're not, you know, I guess if there's no more questions, then we could wrap it up and then you know, kind of call it then. But
Yep, I think we'll just stay on for maybe 2 more minutes, Mike, see if a question comes in, and then
that's fair.
if not, we'll
Yeah.
wrap it up. For those still listening in, you know, I will mention that Inventory Planner does work for all sizes of retailers and wholesalers. So what I mean by that is we have customers that are doing under $1 million in annual revenue. We have customers that are actually doing over $1 billion in annual revenue. So if you have a product catalog and you feel like in the past you've cut what I call a bad PO, right? Purchased too much of one item, you can't sell through it, not enough of another item, leaving money on the table. If you're having reporting issues or reports are just taking you way too long to put together, I mean, these are reasons that you'd want to reach out, regardless of the size of your organization. We do price per the size of the organization, so we'll give favorable pricing to make sure that you can afford and reap the benefits of Inventory Planner.
Oh, here's a question. It says, how hard is it to purge current inventory and put new into Inventory Planner?
Yeah, that's a great question. So, of course, before you start utilizing Inventory Planner, you'd absolutely want to make sure that your inventory levels are as accurate as you can get them. Now, the good news is our implementation team can help out with that to a certain extent. So if it's a situation where you come to us and say, unfortunately, our inventory levels are just not accurate, they can give you some tips, tricks, help you out to a certain degree to get those inventory levels accurate. And then that's when we'd want to start relying on the data with an Inventory Planner. We don't want to feed it bad data is what I'm trying to say. But again, the good news is that we come across this situation all the time. We've got processes in place to help you out with that.
Awesome. And to kind of expand on that, we also, the Inventory Planner also has the capability of hosting a virtual warehouse of sorts within the application. So if you have like a offsite storage that's not associated or related to any of your integrated platforms, we can also track the inventory within that so that those, you know, virtual locations can be included with your purchase order and your transfer order workflows. And yeah, that's all managed directly within Inventory Planner also.
It's a good point, Mike. Kind of elaborate on that. Yeah, if you're sitting there listening in thinking, I'm just a bit skeptical about my data, or do I have the right systems in place for Inventory Planner to plug in, I'd say still reach out. You know, we can identify that together. 99 times out of 100, we can figure it out, right? If you give us your tech stack, we'll figure out where the single source of truth is for each one of those data points, and we can link up accordingly to pull that data. All right, Mike, anything else? Any other questions coming in?
I don't think there's anything else, so I think this would be a good spot to wrap up. I want to thank you for presenting this. This is great information, and I want to thank everybody for attending as well. It's great to see all your names in the list. So thank you for taking the time out of your day to be here. I hope you learned that inventory planner could potentially be a good fit for your business. And if it looks good, then please reach out to David and let's have a conversation.
Thanks, Mike, and thank you to everyone that attended. Again, don't hesitate to reach out, even if you're just additional questions, not sure yet, want to understand more. Please reach out. We'll get you all the information you need.
All right. Thank you, everybody. Have a good day.